How to invest in the stock market. So what you have to do to invest in the share market. Firstly, open a demat and trading account online with a broker and link your bank account with that. Opening a demat account is a very simple and easy process. Once you have your demat and trading account, you can start investing in the Indian share market. You need to be familiar with the stock exchanges and their functions. For that I have already shared a video, please watch. I am given that link in the I button. As per your goals, choose the particular financial asset for investment. Indian share market is the one-stop destination for all your needs. If you are more concerned about regular income and preservation of capital, you can opt for debt instruments like bonds. If you want capital appreciation and willing to take the risk, equity is the one for you. Before you invest in a share, do a complete study of the company, its financials, future prospects of growth, etc. Types of stocks to invest in share market. Large cap stocks. These companies are well established and have a strong presence in the market. Companies like TCS, Infosys, and Wipro fall under this category. Investing in these companies is less risky. Mid-cap stocks. These companies have the potential to grow big and are relatively riskier compared to large-cap companies. Small-cap stocks. Start UPS fall under this category and are highly risky compared to the above two. On the upside, they can become a runaway success overnight. The next essential aspect you should know is IPO, initial public offer. For that I have already shared a video, please watch. I am given that link in the I button. When you buy a share, you can be a common shareholder or preferred shareholder based on ownership. As a common shareholder, you are permitted to vote in shareholder meetings and you are eligible to receive dividends. If the company where you have invested goes bankrupt, you will receive the share of proceeds of liquidation only after all creditors and preferred shareholders have been paid. As a preferred shareholder, you may not have voting rights. But you will get dividends before the common shareholder receives them. Based on market capitalization, you can invest in large cap, mid cap, and small cap stocks. Market capitalization equals share price * number of shares outstanding. Outstanding shares are the shares that can be bought and sold in public markets. I will explain this with an example. Say a company L&T has 1,000 outstanding shares and the share price is 20 rupees, then the market capitalization of the company will be 20*1000 equals Rs 20,000. Key financial instruments traded in stock market. Shares/equity. Equities or stocks or shares give you ownership of a company. You can buy or sell shares through a broker. Mutual funds. Here, the money is pooled from many investors and then invested in various financial instruments. Investors are referred to as unit holders. Profit generated is distributed to unit holders in proportion to the units held by them. Bonds. These are fixed income instruments also known as debt instruments by which government or a company borrows money from investors at an agreed interest rate for a specific tenure. These are less risky when compared to shares. Derivatives. A derivative is a financial contract whose value is derived from an underlying asset. It can be used to mitigate some risks. Derivatives include forward, futures, options, and swaps. Share market tips. It's always better to do your own research before investing. It's not wise to make a decision based on rumors. Monitor your investments regularly so that you can eliminate the loss-making stocks. Patience is very essential for any investor. Take the help of research experts also before making an investment move. Always be updated with share market news. Thanks for watching. If you are like the video, click the like button. If you want more video related to share market, click the subscribe button.